Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is March 3rd edition of Market Outlook. If you like this newsletter and the email and the text version, please be sure to sign up. Go to our website, www.marketgauge.com. There's an application to just send us your email address. We can send this to you on a weekly basis. All right, so let's go through. Starting with the Dow, you can see we closed on new closing highs, certainly for quite some time. So that's a really good sign. You can see we sort of broke out of this channel to the upside. We had a test on that huge sell-off. By the way, the big engulfing day, just to show you what we're talking about, you can see last Monday in the Dow we actually opened up higher, closed on the lows, and engulfed all this period in here. So that is a really unique thing. It's never happened ever in the recorded history of the Dow Jones Industrial Average. So that's pretty interesting. And the other interesting thing, of course, is we rebounded right back and actually closed higher than where we started on that day. That's pretty strong action, even with the sequester looming. So it'll be interesting to see how we respond. So we are breaking out to the upside of this channel. You can see everything is in gear. The rate of change is actually accelerating to the upside. So it'll be interesting to see how and if people respond to the sequester. Obviously, our guess is if they actually see things affecting their daily lives, it'll definitely have an impact on the overall psychology of the market. Now, let's take a look at volatility. We can see that the VXX, which is the tradable volatility of the S&P, we actually about a week and a half ago, or on February 19th, we actually had irrational exuberance, and of course, you've responded off of that. Now, I would say at this point in time, we are still trading under the 50-day moving average, but this action here suggests more volatility potential if we can get above this declining 50-day moving average. So that's a key component. It would almost look like flagging consolidation for a move much higher. On the other hand, we could be just failing at the declining 50-day moving average, and then of course just meaning that the market will continue its rally, drifting down here. So we want to be keen, keep an eye, as well as on the key price action in the indices. Just going back here, what I would do now is going back to the key indices. One thing that there's an interesting divergence is that the spiders, the S&P 500, has not made a new high. I would like to see at minimum the spiders confirm this. What we do have is a brick wall top that actually is still in play until it's violated. So at this point, you got this rising 50. If you take out the 50-day moving average, which is right around this 148.40 level, 148.30, as well as the low that was put in, which sort of coincides, I would be very, very cautious about any consecutive closes through this area. On the other hand, of course, a breakout to new highs would confirm the other evidence that has been put in by the Dow and some of the other indicators. So let's take a look at the spiders. Plenty of room, the spiders and the McClellan index. So this is the S&P 500 intermediate term basis, totally neutral. Okay, plenty of room to move. You would think maybe with this extended move here, we would have been oversold or overbought, depending on any of these extended moves here up. On the move down, we just barely missed getting a signal potentially close enough. You can see we reacted right off of it. But meanwhile, plenty of room to move. Right now, we are, what I would say, on a weak signal. We never got deeply oversold on that 200-point decline in the Dow. On the other hand, we're trading mid-range. The same thing for all the other indicators. So there's plenty of wind up here. Whichever way this market breaks out of this consolidation area, you will get some substantial follow through. So keep an eye on that. Okay, let's take a look at gold. You can see gold. We had this channel that I put in several weeks ago. Of course, we had to test. There was this flight to quality and a nervousness in the market. You had this nice pop in gold, 2 inside days. We traded extremely well. By the way, if you like the theory and how we're looking at the markets, we have some great trading services. You can go to marketgauge.com and sign up for it. Anyway, gold still accelerating on the moving averages to the downside. This move up on the 2 inside days made a great trading rally. We were oversold on the RSI. Through the bottom of the channel, came back through it and testing it here. We could also now, as the price establishes some new range, we can easily adjust this channel a little bit, drop a parallel. Let's move this out of the way for now. And our new channels look something like this. So it'll be interesting to see if we continue to test and potentially drop through and really break to the downside of this channel where you can have a significant drop. However, still go back to the bigger charts. You can see we're right sitting on this weekly support line that we've been referencing now for almost a year. So we're sitting right here. This is a really, really critical support level. If we break through here on a closing basis, our next stop is a good $100 lower in bullion to 150 lower from here. I could see some support coming in around 140, and that also coincides with this rising 200-week moving average. So there you have gold. Let's see, next. Let's take a look at bonds. I'm going to switch to the underlying, which are TLTs. This is interest rates. You can see we broke out of this critical channel. We sort of been, once we hit this 116 wall, we broke through it. Of course, the Italian panic has left its mark. The market is right now sitting at a potential phase change. We just traded above that declining 50-day moving average. In this case, we really like to see a series of closes, at least 2, to confirm a positive phase change. And again, you're still contending with a deeply declining market. So I see any rise here, even with the phase change, certainly contained at the 123 level, which is the 200-day moving average. So that's the picture in bonds. We're setting up, again, this is a very interesting consolidation area. If we can close above that 120 level, 120.85, or below this level here, the 117.50 to 118, you could see another test and potentially putting in a compound bottom. So again, following the range here is the key, and that's the same thing with the indices as well, especially the spiders. You have a really well-defined range to trade either way out of, and there's a couple ways tactically to handle it. Obviously, that's going to be how it unfolds. So our trading tactics, along with understanding these key points, is what we cover in our service, and that's only can be determined at the time we start hitting these critical levels. So at any rate, let's take one look at something else here. Let's take a look at EWI. That's the Italian stock market. You can see a couple of things converging very interestingly. Number one, On the weekly chart, we're sitting right at the 65-week moving average, which is rising. In addition, the 65 and the 200 days seem to be converging. But the bigger picture, you can see just how much trouble Italy is in, because this is one country that has not recovered since the financial crisis. So the low was put in 2009, along with all the other world stock markets, and basically we're not trading that far off. Within a month of the low that was put in, we're basically trading at the same price. Now, the other thing to note, Italy is already, from a price standpoint, RSI is about the weakest we've seen. We don't get these spikes but every couple years. So the convergence of being on the longer term weekly moving average that happens to be slightly up, a little bit oversold, indicates that maybe the resolution in Italy is at hand, and that the political circus that is been going on will be resolved favorably to keep things going with the euro at any rate. So again, that was the weekly chart. You can see the daily chart sitting right here on that 200-day moving average. And again, interesting trading range. You had this huge day when the Italian elections were announced, the results, and since then we've been trading inside of it. So the fact that we have 1, 2, 3, 4 days inside the huge down day, you can sort of bracket that area and trade against it. So hope you've had a great weekend out here in Santa Fe, New Mexico. It's sunny and gorgeous, and the birds are chirping, and spring is coming closer. At any rate, have a great weekend. Bye for now. Keith Schneider, CEO, MarketGauge.com.